Hello everyone, welcome to today's weekly market insights. Now, as we have a look across to the calendar, there's a few data points to note across the calendar. We had inflation out of Germany on Monday, pretty strong numbers. We had inflation out of Europe on Tuesday, again strong numbers. GDP out of Canada on Tuesday as well, strong numbers, and some mixed PMIs out of China. Now, there was a couple of other things across the calendar as well, across some other countries, but the main focus of attention this week was not the calendar. It was to do with Jerome Powell, the chairman of the Fed, and it was also to do with the worsening COVID situation across the globe. Now, as I bring you across to this page to explain the COVID situation, what we can see here is a 7-day rolling average of confirmed cases across a few different countries. Now, across Europe, we can see Germany's cases rising exponentially. We can see France's cases, again, it's a vertical line up. Each of these would be each day, giving us a 7-day rolling average, and it's just again vertical lines higher across both of them, and in many countries across Europe. We've got UK. We've got an uptick in cases across the UK. We've also got a slight uptick in cases over the past few days in the US, but they have not risen as fast as some other countries around the globe. Now, we did have a second case of the Omicron variant in the US yesterday. We had our first case of community transmission in the UK, and we have also had a nationwide lockdown for the unvaccinated in Germany. There's also restrictions about going into a restaurant. You got to be fully vaccinated, and you've got to have a negative COVID test and a proof of identification just to go and eat dinner in a restaurant in Germany. Now, as we come across and look at some other countries around Europe, we can look at Slovakia, we can look at Czech Republic, we can look at Belgium, Netherlands, wherever you want to look, cases are rising, certainly across Europe anyway. So as I clean this up a little bit and get rid of them, the main focus of attention is not going to be cases, although cases are bad. What is going to be the main focus of attention for markets is if I change this over to confirmed deaths. Now, deaths is what's going to drive restrictions, going to drive lockdowns, going to drive potential restrictions around travel, which is obviously what we need to keep an eye on when it comes to looking at this type of information. Now, that could be down to a little error. US, massive jump in cases in the US. But as we look to Germany, look how fast deaths are rising. You look at France, deaths are rising as well. UK, we have not seen deaths rise yet, but we have also only had the Omicron variant, this week in the UK. So it remains to be seen how deaths react moving forward. Now, this has obviously sent jitters through markets, across markets. It remains to be seen how much of a problem this becomes. But on initial research by some places, people seem to believe that the vaccines will work against this variant, that this variant is not as deadly as other variants, but it is also slightly more transmissible. So we obviously are going to need some more information on that to make a proper opinion, but signs look okay from the Omicron side of things, but are the vaccines wearing off? Are we going to need to get more boosters out to people quicker? Remains to be seen how these deaths, the number of deaths, does it continue to rise over the next couple of weeks, or does it start to drop off? That will be a big impact on markets either way. Now, as we come back to the calendar, we had at 3 o'clock on Tuesday, we had a speech out of Jerome Powell. We had a couple of speeches this week. Basically, he mentioned, if we come across to charts across here, we can see the COVID impact, causing some downside across equities, plus the fact that Jerome Powell indicated earlier on during the week that an improvement in the US economy and higher inflation meant that the central bank could taper its asset purchases faster than expected. This opinion was reiterated by a number of other members of the Fed on different interviews across different platforms throughout the week. So it seems to be a consensus in the Fed at the moment that maybe tapering asset purchases should come a little bit quicker than was initially anticipated. Now, that has helped to keep equities suppressed. We can see a downtrend across the Dow Jones at the moment. We can see it just making clear lower highs, lower lows, lower high, lower low, potential lower high. Are we going to get a move lower? another move lower remains to be seen. It does seem that the momentum is waning a little bit. Remains to be seen coming into next week how that situation unfolds. That is also helping to keep US government bond yields depressed. The 10-year yield, as we can see here, is now down below 1.5. It has seemed to have settled below 1.5 and has just chopped around for the past 24 hours. We look to euro dollar as well. There is dollar strength across some other, across the board on a lot of currencies. But as we come to euro dollar, bring it back to the calendar and have one quick look. We had strong inflation out of Germany on Monday. We had strong inflation out of Europe on Tuesday. And we've also got retail sales now to come out in a minute. So we had a couple of strong data points out of Europe this week. Bit of euro strength, bit of dollar strength calls for some choppy sideways range bound markets and markets that are less than ideal to try and trade. What else we've got is obviously the US dollar against the Turkish lira. We had inflation out of Turkey this morning coming in at just under 22% for the year. 22% inflation is very high. Driven by Mr. Erdogan, president of the president. He's obviously seems to have a problem with higher interest rates. He wants lower interest rates to encourage growth, but if inflation is at 22%, maybe somebody has to step in and do something. You got to do what's being told to us. You have a look at inflation the way it is. No willingness to cut interest rates. We do have a bit of a potential setup here across the chart, a bit of an ascending triangle potentially forming. Now, if we do break below this trend line here that we're testing now, obviously that renders that invalid. But if we do break higher, could be another opportunity to re-engage some longs on this chart. Let's come back to the calendar and look towards later on this afternoon. We've got non-farm payrolls now with the comments out of Jerome Powell throughout the week saying that the US economy is improving, inflation is high, and they may need to taper asset purchases earlier than initially anticipated, or earlier than their initial plans. Strong numbers here would reiterate that stance and prove members of the Fed correct. There was also the comment that he said he tried to retire the word tapering. Does that mean he tried to retire the word transitory? Does that mean that inflation is not transitory? The big conversation over the last number of weeks, big conversation over the last number of months in regards to the Fed. Strong non-farm payrolls may tie the Fed's hand in what they can do. In terms of monetary policy. As we look across to next week, main focus of attention next week will be at the back end of next week. We've got inflation out of the US. We've also got a rate decision out of the Bank of Canada and also the RBA. But inflation out of the US will be the main focus of attention. We get some strong numbers today, strong inflation next week. I think the Fed's hands are kind of tied in what they can do. But remains to be seen how NFP plays out later on. Remains to be seen how inflation plays out next week. Something we will definitely keep an eye on and be sure to update you when it happens. Have a great weekend, everyone. Switch off from markets. Enjoy your weekend. Spend some time with some friends and family, and we will be back next week for another weekly market insights. Thank you.